Make sure everybody got their pens and pencils out. Now we're going to continue. So Peace, Profits, Forex Beginners class. Let's get it, y'all. All right, so first I'm going to talk about me. Welcome. I want to say welcome to joining the Zoom call about the Beginners Forex class. So my name is Cherie Lattimore. I'm 21 years old from Louisville, Kentucky. I currently live in California, full-time day trading and investing. I've been trading for 3 years in the Forex market. I started out with learning from the academy, then me and my friends exit to go on our own paths that was more beneficial for us. For the past 3 years in Forex, I've been applying my Forex scalping strategy that I am ready to share with the world. Trading now gives me freedom to become who I desire to be, and I'm ready to share it with others. All right, so Forex for beginners. Welcome, everyone. I am extremely thankful for everybody. I recommend to please take notes. Peace, Profits, Lifetime Mentorship and consultation calls will be available after the call. Please keep in mind this will be the only free call that I will provide and host for everybody. Now, thank you, thank you, thank you. Now, let's get started. All right, so what is Forex? Let's understand Forex. And I put understand because I want you to understand this information within yourself, because everybody, we always say, understand this, understand that. I don't want you to understand this information. I want you to understand it within yourself so you really get this soaked into your mind and your brain. So let's get started. The Forex exchange market is a global marketplace for exchanging national currencies. The world's largest and most liquid asset markets. Currencies trade against each other in exchange rate pairs. Forex trading is the process of spectating on currency prices, potentially make a profit. All right, so this is the most important part where you would like to take notes with this. So how to read candlesticks. This is what you will see when you open up any chart in the market. It will be stocks, Forex, but right now we're training as Forex, but any chart you open up, you're going to see candlesticks. So this image shows two candlesticks. One is bullish and the other is bearish. The top and the bottom of the candlesticks is called wicks. Make sure you note that down. The top and the bottom is called wicks. The top of the wick tells us the highest price went to, and the bottom wick tells us the lowest price went to. In between the top and bottom wick, it is called the body. This is how price moves up and down. When the candle is going up, it is a bullish candle. And when it's going down, it is a bearish candle. So this is really important when you're approaching the market because you're going to see the wicks go up, down. You're going to see the body moving like crazy. So this is really important. And the wicks helps us to leave history on where the market was and where the price was landing at. So the next slide, I'm going to show you the different types of candles. But this is really important to like screenshot, write this down. So making sure that you know the top and the bottom is called wicks, and the middle of it is called the body. The left side is the bullish and the right side is the bearish. When it's an uptrend, that means it's a bullish market. You'll hear people be like, oh, it's a bullish market. It's a bullish market. That means it is an uptrend market. When people say it's a bearish market, that means it's a downtrend market. Now, here's the different types of candles. Can you guys hear me in the chat? Someone said they can't hear me. You guys hear me in the chat? All right, I'm sorry. Okay, I'm gonna continue. All right, so this is the different types of candlesticks in the market. Different types of candlesticks. On the left, you will see the first bullish and bearish candle is a strong candlestick. When you see a strong candle with no wicks, that means the price movement is very strong. On the right side, the last candle shows how weak the price is, and it will most likely move the opposite direction. The longer the wick, the more the next candle will change the direction and the trend. So this chart basically shows you like the different type of candles you're going to see when you approach the market. You're going to see strong trends. When it's a strong one, you're going to see the candlesticks that's on the left. And if it's very weak, you're going to see the ones that's on the right. And that means most likely is going to change the type of trend. So you see the one that's on the right, most likely is going to go up. You know, if you see the other one, that means most likely it's going to go down. So the RICS really tells us like how fast the market is moving when it's going up, down, up, down. So it's just showing us the price history. Now, here's the good stuff, y'all. The trending markets. All right, so when the market is trending, this is the best time to trade because the banks are in the market. We only trade when the banks are in. We mark up the bank's footprints and follow the trends with them. So this is really important because when the banks enter the market, most likely it's going to trend. The market's going to trend. And when the market is trending, it's so much easier and less stressful to trade because it's a clear path for us. So like when you see on the image on the right, the uptrend. So when the market is going up, it's so easy for us to follow the banks. So the banks is creating those higher highs. We get in those higher lows and we're going to follow the bank. And don't worry, I'm going to show examples, live examples, the next slide. All right, so the uptrend. When the market is creating a uptrend, we want to buy low. Focus on the most recent higher low to enter your trade to follow the uptrend. So we always buy low when the market is going up because it gives us more room to make more profits in trades. You never want to sell low when the market is already dropping, for example. So downtrend. When the market is creating a downtrend, we want to sell high. Focus on the most recent higher low to enter your trade to follow the rest of the downtrend. So it's the same for an uptrend. So you see that there's a lower low and lower highs. So those banks is creating those lower highs. We're always going to get in those lower lows and then we'll sell it and then we'll follow the rest of the trend. So it just gives us enough breathing room to make like profits before the trend starts to switch up on us. So here's some examples I have for you guys. All right, so I got this uptrend example right here. The HH means higher high and the HL means a higher low. So what I got marked up in the rectangle box and what I got circled, that's where we're going to enter at. This is our main focus. So for example, the market is going up right now. I'm not going to enter my trade until it goes down to that rectangle box. When it goes down to this rectangle box, I'm going to enter and follow the rest of the trend. Let me show you. So now that it touched my rectangle box, this is what I call a zone. So it's not really like, this is the zone. So when it enter my zone, now is game time. Now I'm ready to get in because it went down to that higher low and it's going to create a new higher high. It's going to pass up that HH right there, the most recent one, and it's going to create a new one. And this is when we want to join inside the market. And this is what happens. Now that it touched my zone, it passed up the recent higher high and I won the trade. This trade I won. Right when it passed the green, which is a take profit, you won the trade. Now, if it passed in the red, the stop loss, that means I lost the trade. But I knew I was going to win because I knew it was going up. I knew price would eventually had to go down to that higher low. And I knew that I was going to win the trade if I aim it to the next higher high. So this is what I do often because I am a scalper trader. I only trade seconds to minutes. I get in and out. I don't trade for that long. Literally my trades last like 5, maybe 10 minutes. Like I don't last long. So I like to get in and out the market, aim for the next higher high, or if it was a downtrend, aim for the next lower low. So those were just some examples. So here is the price action. Price action. It is very common that a lot of new traders use indicators and way too many tools on their charts. Indicators are normally not accurate and very laggy. That is why price action is the best way to trade currencies. So for this image, for example, right here, you see nothing but candlesticks. You just see candlesticks, and that's exactly how you want it. You know, only thing you want is like those drawings I showed you from the recent example. You will want your zone. You would want just a small markup. You never want all those tools will tell you, oh, this is the right time to buy, or this is the right time to sell, because those tools, they're going to lie to you. It's really laggy. It's really slow. They're going to tell you to buy, and it's not the good time to buy. So a lot of new traders like to depend on indicators. That's what's called, like to depend on indicators, when indicators is really not a good way to trade at all. So what is price action? The discipline of making all your decisions in trading from a clear chart with no indicators. This is a good page to note down in your notes, just letting you know, by the way. So scalping, like I told y'all previously, I am a scalper trader, a trading strategy that specializes in profiting off a small price change and making a fast profit off reselling. Scalpers are only in trades seconds to minutes. Like I said, I only like to get in trades in and out, in and out, in and out. I do not like to stay in trades, sit here for no longer than like 30 minutes. Like a trade should not last that long when you are scalping. You should literally get in and out the market. Those are for the day traders. Those are for the swing traders who holds it for days to hours. That's not us. We get in and we get out. We make our money and then we get right back out. And so now risk reward, a measurement of how many you stand to profit for every dollar you risk on a trade. Never risk more than 1 to 2% of your account. So this is a lot of people problem. When people trade in the market, they like to get crazy risk. They like to risk 5%. They like to risk 10%. Now, say if you lost that trade, now you lost 20%, 10% of your account. So it's really good, no matter how big your account. You can have a 10K account and you can have a $100 account. You can even have a $5 account. It don't matter, but always risk 1% of that account, because if you lose that trade, you only lose 1% or 2%. So say, for example, you have a 10K account and you only want to risk 1%. This is what I do very, very often. I only risk 1%. That means I'm only risking $100. If I lose $100. Not a big deal. Now, if I was risking like half of my account, that is a big deal, because now for the next trade, I don't have breathing room to win for the next trade. So the banks, like I told y'all, the best way to trade is when the banks are in the market. When the banks enter the market, it is a perfect time to trade price action, because the banks, it will be very volatile. So that means the banks is what moves the market. If the banks is not in the market, then it's just going to be traders like me, and we're just going to trade back and forth, back and forth, back and forth. But when the banks enter the market, the banks is moving this up. The banks is moving this down. The banks is moving the crazy moves, and we want to follow the banks. We are trying to make money with the banks. And so that's why we come up with the strategy to make money with the banks instead of making money with the regular traders, because this is where the big money comes in. And so make sure you note this down about the price action and the scalping. And I'll move on to the next one. All right. And towards the end, y'all, I will be able to answer questions, anything you have, or any slide you want me to go back to. I'm willing and open to go back anytime. All right, so how to enter a trade. So first, you find the Forex pair you want to trade, and you will click on the button that says trade. Second, you will make sure that the top of your screen says market execution. This will allows you to enter where price is set at the moment. All right, so third, you will select your lot size based on how much you are willing to risk. Then you will press buy or sell. Depending on your trade, once you click either button, your trade order is now currently active in the market. So here, for example, is Euro USD. This is my favorite pair. Like, I trade this pair faithfully. So say, for example, I want to buy it right now. So that means I will enter my lot size, which is 1.00, and I will buy it. And so a lot size are the units of measurements. They determine how many units of the currency you're buying. So it just determines how much currency are you going to buy. And don't worry, you're going to know what your lot size is. It's a certain website that we go to, and you can type up, you just want to risk 1% on $100 account, or you want to risk 1% on like any size account. This website is going to tell you what lot size to type in, because you don't want to type in just any random lot size and then you lose like a whole bunch of money. Like, you don't want to type in 111.000 and then all your account is gone when you press buy. Like, no. So you go to this website that I will show you guys later, and this website will tell you how to know what's your lot size to use in the market. So I'm going to go to the next slide. Yeah, if I'm moving too fast, y'all, please let me know in the chat. Let me know if I'm going too fast or anything. All right, so how to set up risk reward. For short, this is called the RR. So if you'd be like, oh, what's your RR? It's risk reward. So what you're risking and the reward if you win. So for example, entering in your take profit and stop loss is very important while trading. For example, this trade, the take profit was set at the price 1.1002. Once the candlestick crossed over the set take profit, you won the trade. But if the candlesticks would have crossed over the stop loss at the price 1.09702, you would have lost. Once your trade hits the take profit or stop loss, your trade will be over. So not to confuse you, look at the image on the left side, please. And then so you see the green and you see the red. So those green numbers right there, what I just read out to you, that's what you would enter in inside of the right image. So where it says take profit, you would enter those green numbers inside of there. And then where it says stop loss, you would enter those red numbers inside of there, and then you'll press modify. Now this will secure your position, because if you did not enter those numbers in, your account can go negative like crazy if you did not have a stop loss. Your stop loss is to stop you and get you out of that trade so you won't lose more than what you wanted to risk. And now your take profit is just an aim for what you are aiming to win your trade. Once you win, you're out this trade, wherever you mark your take profit or stop loss. Now for short, that is called TP. So your TP is take profit. This is good to note down. And then your SL is your stop loss. All right, so this trade has a 2 RR risk reward. The risk is a 10 pip stop loss, and the reward is a 20 pip stop loss. TP, my bad, y'all. Flip that over. The 10p stop loss and 20 pip TP. So pips measure the amount of change in exchange rate for currency pairs. It is calculated using the last decimal point. So when they be like, oh, like, how many pips did you have in this trade? Well, you had 20 pips. That's what you aimed for. And so your stop loss was 10 pips. With me, when I personally trade, since I'm a scalper, I risk a 1-to-1. So I aim 10 pip stop loss, 10 pip take profits. Sometimes I'll do 20, but no more than that, because I like to get in and out, like I said. So usually it's just like 10, 10, and then I win the trade and then I'm out. So make sure you're notating any of this down. Remember, like, I can go back to slides at the end. Any questions you need at the end, I am fully aware to answer them. And please let me know if I'm going too fast, everybody. All right, so here is some examples. So this is what I mean when the banks leave their footprints in the market. So on the left, you see where I drawed up my zone from the start of it. In the beginning of the rectangle, my zone. You see that short uptrend right there. Like I told y'all, it comes down to my zone. Once it comes down, I'm following the rest of the trend. I'm going in and I'm aiming to the next higher high. So I won this trade in this example because it got in my zone and I followed the rest of the trend. Here's another example. So here's another uptrend example. You see that the banks left their footprints. And the reason why the banks do this, they leave their footprints and then they come back, is because for the other banks who didn't get in, they want them to make money with them as well, for their investors and everything. So they will leave a footprint and then it'll be like, hold on, y'all, we got to come back. We got y'all. Y'all gonna make money with us. Like, come on. And then, so they come back to the market and then they continue the trend. So every time they come back, I get in. I'm making money with those other investors. So this is what we do. We mark up our zone and then we get in. Here is one more example of a downtrend. So you see that they going down, they mark it up and be like, hey, hold on, y'all, don't forget about us. Then they go down, they come back and go down again. So every time they do this, I'm aiming for the next lower high. Like I'm aiming for the next lower high, because I know that it's going to go down. I mean, the lower low, I know it's going to go down. I know the banks is going to come back to get the other investors. Every time they do this, I'm getting in. And notice that my stop loss is always behind that zone. If it ever hit it, I'm not going to lose no more than that, because I'm having it behind the zone and I always aim it to the next lower low. All right, so apps and websites to download. This is a good page to screenshot, like I said on the thing. So MetaTrader 4, I use personally 4. 5 is just my backup. I never use it, just letting everybody know. It's the same thing though. Used to place trades, make money, watch charts, see previous orders. If you want to place trades on your computer rather than your phone, then go to the website and download. TradingView is a website and app traders use. This is to watch charts, set alarms, backtest strategies, draw setup, markups. Please put your audios on mute. Please put your audios on mute, everybody. Hold on, everybody. Hold on, everybody. Please put your audios on mute, everybody. All right. Sorry about that. So, sorry everybody for that. All right, so my Forex book is the website and app you can use. Either you will use this for proper risk management. It will let you know how much trade lots and size you should use. That's why I was telling you guys earlier how much lot size you should use to enter your trade. This is the app or website will tell you how. And so Forex Factory, I don't have it there because it's not an app, but it is a website you need. This website is the Forex News Calendar. This site will let you know if there's any news going on any pair. So say, for example, you're trading Euro USD and there's news on the US right now, like unemployment news is going on. That is going to affect the market. And you need to know that. Say it's going to affect it at 8:30 a.m. That means do not trade at 8:30 a.m. Trade at 9 a.m., or trade 30 minutes before, but always trade 30 minutes after or 30 minutes before. Never trade news. If you do, good luck, because the market is going to go crazy. It's going to go up, down, crazy. It's going to go all around. Do not trade news. That is the perfect site. Everybody, please screenshot this page because this is how you even going to trade in the first place. Please screenshot this page. All right. All right. So the Peace Profits Lifetime Mentorship. Thank you, everybody, for joining my free Forex beginners class. My Lifetime Forex Mentorship is now available. If you made it this far, I would like to give you a 10% discount code on my one-to-one mentorship program. I am going to coach you one-on-one lifetime mentorship, private Telegram group chat, unlimited one-on-one phone calls, my personal trading strategy in detail on what to do and how to enter the market and trade with the banks. Personally, one-to-one, every single detail to the bone, everybody. So homework assignments, daily, weekly check-in, and trading signals. Trading signals is mean you're going to get my personal trades in the market. I'm going to be like, hey, I see Euro USD going up. So I'm letting everybody know in the group chat and they could trade that pair with me. And so my lifetime mentorship is going for $111.11. And then my bookings with my 30 minutes call is $33.33. And here is the discount code if you are interested. All right. And thank you, everybody, for joining my Zoom call. I really appreciate you guys. My DMs is open, peace.re and Peace Profits. My website is also available now. It's in the link in the bio. And my email as well is peacere@yahoo.com. And if you have any questions, it's going to cut off the Zoom. But if you do have any questions, please message me or email me personally. If you have any questions about the Zoom call, any questions about my mentorship, or anything about trading, I am really open and understanding for everybody. So thank you for everybody joining.